Mega cap earnings season continuing to roll right along, and we have a volatile one to say the least, as we have shares of Google rallying nearly 11% in the after hours. That is a day after shares of Meta were falling close to 11%. And so if you were out here selling Google today on the basis of Meta's report last night, this one probably stings just a little bit more. But hey, teaches you a valuable lesson, probably not to play that earnings swing trade, simply because it's hard to predict what these companies might come out with. And so we'll look to see why Google shares are rocketing. We'll take a look at their numbers from a revenue and profit perspective. We'll take a look at the next few quarters of growth over at Google. We'll also take a look at what they announced, and that is the start of a new dividend, along with a massive bump up in their stock buyback program. We'll take a look at how advertising is faring over at Google, both on their search engine and on the all-important YouTube, which is the platform you're watching this video on. And then take a look at some levels where I think Google still has the ability to continue to improve on their operating efficiencies. Then we'll take a look at the balance sheet, cash flows, and financials. This company is looking extremely healthy from their financials, and shares of Google breaking through my screen, breaking through this all-time high at nearly $177 a share. We'll take a look at it from a technical perspective, outline some areas where I think you could step into Google or where this one is continuing to head. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Google, despite a 47% year-to-date, 1-year rally, extending those gains in the after hours by close to 11%. And look, a nearly $2 trillion market cap, that is a lot of billions you're going to add tomorrow if these gains hold. Now, that is for a good reason, because revenue is coming in at $80.5 billion. Yeah, that's right, with a B. That is up 15% year over year, and still beating expectations by close to $1.84 billion. You see, the estimate on Wall Street, the high end, in fact, was at 80.11. And so Google coming in higher than the high end on Wall Street by nearly $400 million. That is a huge beat on their top line revenues. In terms of GAAP EPS, that also coming in with a huge beat, coming in at $1.89. Again, the high end on Wall Street was at $1.66. In fact, the high end for the next quarter's earnings were at $1.85, and Google came in with $1.89. So you already know these estimates on Wall Street, both from the EPS and revenues, will have to get bumped up as we move along, and probably far lower right now from an earnings perspective, but also a valuation perspective. So again, we'll take a look at those things. And then from an operating perspective, this company becoming extremely efficient, and we'll see those efficiencies kick in their quarterly numbers. But you see operating margins coming up to 32%. To give some perspective, last year at the same time, they were at 25%. So your operating margins absolutely exploding, and that is contributing to your share gains of close to 12% in the after hours. But similarly, what is also contributing to those gains is the initiation of a dividend. So Google finally jumping on board with its peers and providing that dividend of roughly 20 cents a share. That's on a quarterly basis. So you annualize that, you're getting an 80-cent dividend for a stock worth $157, at least as of right now. So you're looking at right around 0.5% yield for Google as of right now, and tomorrow it'll likely be a little bit lower. But look, we got that dividend from Meta a couple quarters ago. We got a dividend from Salesforce, and these companies just showing signs of maturity. And when we look over to their balance sheet and cash flows, we'll see this company really just has a ton of cash that really doesn't have a lot of uses for it. And so starting that dividend, I got to give a pat on the back to the Google management team. Certainly jumping on board for that dividend is, in my opinion, a great idea. On top of that, you have a stock buyback announced of an additional $70 billion. Yeah, there's a lot of companies on Wall Street that aren't even worth $70 billion. And Google is looking to buy back nearly $70 billion of its own shares, despite continuing to buy back more and more shares. And we'll take a look at that again as we go over to their cash flows. But I think phenomenal decisions over at Google to return cash to shareholders, return more capital to shareholders through dividends, through buybacks, because simply there's not a whole lot of use for the cash over at Google, simply because the business is so good and pretty much runs itself. And speaking of running itself, we have Google search revenue is coming up to $46 billion. That is up from same time last year where we were at $40 billion. That is a nearly 14% jump year over year. Extremely strong growth on their search business. On top of that, you have YouTube ads continuing to grow extremely strong, up to $8.1 billion. Last year, we were nearly at $6.7 billion. So both YouTube search and YouTube advertising and Google search continuing to prove extremely strong. There's probably some level of AI in there that's helping out their algorithms. We saw similar results from Meta as their advertising business continues to just take off like a rocket. Now, you did have some slowdown on the Google network side, but basically flat on a year-over-year basis. And so your total advertising revenues came in at $61.6 billion. Last year, we were at 54.5. In terms of subscription revenues and devices, those also bumping up nicely, up from 7.4 now at 8.7 billion dollars. The all-important Google Cloud segment coming in at $9.5 billion. Last year we were at 7.5, so a pretty nice ramp up on their cloud business. And what's more impressive on the cloud business is that you're making an operating income far greater than you were last year. You see, last year on revenues of $7.5 billion, you were generating just $190 million in operating income, and now off of 9.5 in top line revenues, you're generating nearly $900 million in operating income. So this is the business that we were waiting on for Google to really turn around, and I think that moment is here. I think it's pretty clear to see that Google Cloud is going to be an operating juggernaut, similar to how AWS had turned it around a couple of years ago and is now the cash cow of Amazon. I think we're still a couple of years away from Google services really taking off, but at least we can see it's in the right direction. It is headed there, and it's headed there pretty rapidly, as you have nearly a 9x or 8x on your operating income year over year on that Google Cloud segment. So that's certainly extremely impressive. Now, in terms of other bets, this is still the segment that Google tends to lose money on. This is the part of the business where they sort of just experiment in new technologies and new innovations. And so the AI development teams under Google, DeepMind, and Google Research were previously part of a different segment, part of the services segment, but now that'll be reported as part of the Alphabet level activities. And we see that segment continuing to lose money, although it is less than last year. Last year, we were bleeding roughly $3.2 billion on an operating basis. Now that is narrowed down to $2.3 billion. So certainly in the right direction, but still, we saw this from Meta on their Reality Labs segment. Look, these companies can continue to get a pass burning through money on some other level activities as long as the advertising business continues to chug right along. As long as YouTube ads and Google search is continuing to be extremely favorable, yeah, betting roughly $500 million in other bets and losing close to $2.3 billion in operating activities on that segment, not a huge deal. Something we can allow as long as the Google services, which is advertising, and now Google Cloud, are continuing to print operating profits to the bottom line. And so something to keep in mind. Similarly, we saw this with Meta. Similar thing, we're seeing it with Google. Now, one thing I do have to give credit to Sundar Pichai for is narrowing the employee headcount, and that last year was closer to 190,000. This year, you're sitting closer to 180,000. So tough decisions over at Google, reducing the headcount, something I think they were looking to avoid. And look, anytime we have layoffs, that's not a good thing for really anyone involved. And we hope the people that got laid off can land back on their feet and land a new job. But from an operating basis, Google reducing the headcount, certainly proving to be extremely efficient from an operating perspective. We'll see on their statement of income, you can take a look at cost and expenses just hardly budging. You see the cost and revenues coming up $3 billion, R&D ticking up right around $500 million, but then sales and marketing staying roughly flat year over year, and then your G&A ticking down substantially year over year. So despite your cost of sales growing just $3 billion year over year, you were able to expand your revenues nearly $11 billion year over year. And so leaning out this business by reducing some headcount and driving some operating efficiencies, really proving to be extremely valuable over at Google. Like we saw, expanding those operating margins up from 25% up to 32%. And similarly, your income from operations exploding up to $25.5 billion, bringing your net income up to $23.6 billion. Last year, we were just at $15 billion, which is still an impressive number, but that jump year over year is far more impressive. On top of that, this company continuing to do share buybacks and reducing their shares outstanding, helping bolster their EPS further. And like we said earlier, this company initiating that dividend and increasing that buyback by roughly $70 billion. As we see, they're sitting on roughly $110 billion of cash and marketable securities, really showing that this company is in a fantastic capital position. We looked at Meta's balance sheet, and in fact, I think Google's balance sheet looks even better. Again, that $108 billion of cash and marketable securities is balanced off by just $76 billion in current liabilities, $13 billion in total long-term debt. In fact, they have nearly more cash on hand than all of their total liabilities combined. And so when this company initiates a 20 cent per quarter dividend, yeah, you better believe this company really has the room to not just pay that, but consistently grow it. And so over time, I think these tech companies are going to be start to known as dividend growth companies, simply because they're in a tremendous position to continue to raise that dividend over time. In terms of cash flows, we have that $23.6 billion of net income. We get to add back some depreciation, which did tick up year over year. This company continuing to build out data centers and invest in AI infrastructure so that depreciation on property plant will rise. But also what you have is a flattening out on your stock-based compensation. We saw that headcount declining by roughly 10,000 employees year over year. And what that will do is nearly flatten out your stock-based compensation. And so despite adding an additional $8.6 billion on your net income, you didn't hand out more stock-based compensation. So tremendous operating efficiencies over at Google, really something that they had to show to Wall Street. And from that, we generated close to $28.8 billion in operating cash flows. We see our property, plant, and equipment capex actually doubled year over year. And so, like we said, this company continuing to invest heavily in AI. We saw this from Meta last night, as well as their capex is also expected to rise year over year. And so this probably bodes well more so for the semiconductor names like an Nvidia, like a TSM. All of this $12 billion, or at least a lot of it, is probably flowing right down to those semiconductor names. Google betting heavy on property equipment, building out AI infrastructure, probably, in my opinion, a good bet, considering they're still generating boatloads of operating cash flows. And so even with that $12 billion investment in their capex, they're sitting on close to $16 billion of free cash flow generated over the last 3 months. And what do they do with that? They buy back their common stock to the tune of roughly $16 billion. And so Google showing it's not afraid to buy back its shares, and continuing to add to that share buyback is an additional $70 billion, likely probably over 2 or 3 years. Additionally, this company does pay down a little bit of debt each quarter. So that's, again, good to see. Phenomenal financials from Google from a cash flow, operating, and net income and revenue perspective, all things chugging right along over at Google. And then on top of that, they're sitting on just tremendous sums of cash from which they can pay off that dividend and buy back their shares. Speaking of buying back shares, you have the rally now extending in the after hours up to 16%. Wow, that is a monster gain for Google in the after hours, absolutely tearing through their all-time highs, tearing through this level of resistance. And look, you're probably wondering, what should I do with shares of Google? Certainly if you don't have a position in a stock like this, look, if you have a position, you're probably just holding on to your shares. You can continue to ride out this stock. There's no reason from this report we got to really sell shares of Google unless you want to take a profit. Look, there's never a harm in taking a little bit off the table. And so I wouldn't blame anyone for taking some shares off of Google at these levels. But if you have no position in Google and you're looking to step in, first level is probably wait for a pullback to the top end of this channel. I think you want to wait for a pullback. You don't want to buy into the stock at a FOMO phase. Despite how tremendous the financials really are, yeah, this company will, and like all stocks, will experience some sort of pullbacks at some point or another. Likely your first level is back to the top end of this channel, closer to $170 a share. Really not a huge pullback, but if you're eager to get in shares of Google, that is the first pullback I would be looking for. But deeper into this channel, once again, I think at some point you'll probably re-enter this channel. I think that deeper pullback somewhere in the 150s, 160s is probably your chance to pick up shares of Google. Look, this one is absolutely breaking out, and the estimates on Wall Street for shares of Google will absolutely, no doubt, have to get updated. But I think it's safe to say shares of Google will at some point pull back. I think on any significant 5-10% pullback, that is your chance to head into shares of Google. And look, from a valuation perspective, this stock really not trading expensive at all. You see they printed roughly $23.6 billion in net income. You annualize that, that brings you close to $100 billion for the full year. And for a company sitting at a $2 trillion market cap, you're looking at right around 20 times an earnings multiple. So keep in mind, this company is still not trading extremely expensive. That valuation allows you to just step into shares of Google, really, again, on any significant pullback. It's a pretty easy buy and hold stock if you were to ask me. That was my take on shares of Google. Let me know your thoughts on this one in the comments section below. What are your thoughts on that dividend and additional share buybacks? In my opinion, I think it's a phenomenal move by Google management. We'll have more mega cap earnings throughout the season, so stay tuned, hit that subscribe button. Let me know your thoughts in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.